Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is... All right, good morning everybody. Welcome back to another live stream. Happy Thursday to you. Ryan says, my videos have been helpful to him. He's been following me since finding me on the Words of Wisdom podcast. That is awesome. Thanks for checking out the channel, and I do hope that it continues to help you in your trading journey. At the end of the day, you know, trading is a passion of mine. Markets are just fascinating to me, and I love sharing that with people all over. It's pretty cool what we have here in the form of YouTube. Gives us a chance to all kind of connect over a common interest. Let's talk a little bit about what's going on here today. We've got, just from a big picture perspective, today we've got indices continuing to push higher. S&P 500 tapping into that all-time high. NASDAQ, same thing. Dow Jones pushing higher here as well, and the Russell doing quite well. Gold is lower here today. We'll talk about that. Dollar index also lower as well. Oil prices going sideways here, and we've got Bitcoin kind of chopping back and forth as well. As we get started in the stream, if you guys could do me a big favor and just hit that thumbs up button, and also comment in the chat here. Let us know in the chat room what you are most interested in getting access to here in terms of live stream coverage. Are you looking to look at euro dollar, gold, NASDAQ? Drop it in the chat what you'd like me to pull up, and I'll be doing a bit of around the world on charts here this morning. Gold is probably one of the most interesting ones here today. I do want to just kind of take a look at this S&P quickly. We have prices heading through those all-time highs as we speak, continuing to push higher. And a lot of the woes and worries that the market has had seem to have been put to the side. We got stock market moving back to the all-time highs. Usually that coincides with expectations of better things ahead kind of thing. When the market was trending lower, the idea was the uncertainty around tariffs and all those things still exist, right? We've talked a lot about that, about how the market got over terrified and everybody sold, and that was a great opportunity to kind of actually buy against the crowd. Well, now that we're at the all-time highs, I'd actually love to look at the sentiment update for this week. We get this every Wednesday. So let's just take a look at this. So we're going to go to market sentiment here, AAII Investor Sentiment Survey. Awesome. We got requests for gold, gold and Bitcoin, gold, Dow, NASDAQ, Bitcoin, euro dollar, Aussie dollar, everything except stocks. Fair. I have a channel that's dedicated just to stocks. So if you want stocks, go to Trader Nick Stocks. But we'll look at indices, commodities, currencies as usual. Okay, so the AAII Investor Sentiment Survey here put out the latest reported numbers here, still more bearish than bullish. And that has been the case for most of 2025, people have been definitely more on the pessimistic side of markets. We do see, the bearish tone of the room still very, very much thinking that the markets are going to have some sort of big downside move. That's been the case for most of this year. And most of this year, there was a period where this negative sentiment was correct and the markets were trending lower. But what's interesting is that once you had that April bottom, people got like the most bearish right at the bottom and have stubbornly stayed heavily bearish on the market since then. So with the stock market at all-time highs, like, here's the thing, right? If I'm ever bearish on the indices or just risk sentiment in general, if I'm looking at Bitcoin, if I'm looking at risk on assets and they are breaking to all-time highs, to me, that's something where I can't really justify holding a short position, because these things typically go up over the longer term, right? So if you're going up over the longer term on the S&P 500 and the NASDAQ, and what was this kind of downtrend that started completely failed out, at some point, the logical thing to do is to say, okay, maybe I was wrong. And so, does that mean that we have to just kind of skyrocket into the sunset from here? No, but the thesis, if you were a bear on the tariff worries, the thesis has mostly evaporated. Because now if you're saying, no, that's going to happen again, you're betting that relations with China are going to go back into the massive extremes that only stuck around for like a matter of hours, right? That's what was so terrifying to the markets, was the 145% tariffs, which lasted very briefly before, Trump essentially announced that the 90-day pause and negotiations began and all that sort of stuff. So to me, it's like, okay, that's a tough one to call. So if I'm looking at the indices, I still think we have upside. I've been long. I bought stocks over here, bought stocks over here, bought stocks over here, got long the Russell around here. So I'll show you my trade. I'm sorry, I got it a little bit later than that. I bought a whole bunch of individual stocks on the portfolio. And then with Russell, I got long on the pullback that we saw in May. So I'm still in this one. And today might be the day I actually look to trail this stop loss. I have a pretty clear area of where I would like to trail this stop loss. Good to see you, Lano. Thanks for being here. Euro pound, are you still short? I am. I'll talk about Euro pound in just a second. So with the Russell, right, we are breaking through this high. Game plan today is to trail this stop loss. I'll probably do this after stream. So we had this low get formed, double bottom kind of thing, and now breaking through this level of resistance. So I'm going to take this stop loss today. I'm going to move that further into profit. So I'm going to lock more in on the trade. What I like here about Russell is that we were able to double back and find support. Look how brief. This is what I like about this Russell price action. You've had the big explosive move. And this, by the way, this has been a sleeper trade for me because it's been a really like grindy one. Like we went up, we came back down, we went up, we came back down, up, down, right? But we're sitting on a move of an 8% gain on the Russell, which is a pretty good move for the Russell. So anyways, the Russell's up about 8% from where I bought it. And my goal is to lock in something more on this trade. So I have a stop loss trailed. So if this thing tanks, I'm still going to make a profit on it. But I want to lock in more on the trade. Jealous of your Russell entry. Ryan, don't even worry about it. If you're jealous of this one, you're probably not jealous of my oil trade that I tried. I went long oil right here, and within like 1 hour, stop loss was getting threatened, and then I stopped out. So not everything I touch is gold, trust me. I have losing streaks just like everybody else. I took a loss on the Russell. I'm sitting in some drawdown and some currency pairs. Nothing serious at all, but I just want to show I've got winners and losers. So when it comes to the Russell here, my goal is to, like I said, trail stops below this structure here. We broke nicely above this 2120 level, kind of broken, retested, and then kept going here. So Yeah, I'd like to, if the trade's going to reverse from here, I would, or if it's going to pull back from here, that's fine. But I'd like to see it hold this area where we put in this really nice candle. If we drop it down to like the 4-hour chart, you can kind of see what took place there. You had this, here's the big resistance point. We retested that area. Sellers came in, but then they immediately got hit with, you know, the bulls got strong right there. So I pretty much want to lock in something behind that level. And if we trail out, then I'll just look for another entry and take profits on it and run it back again, kind of thing. What type of trading is that? And what's the app name? I'm using tradingview.com to chart my setups. And it's a trailing stop approach with fundamental analysis as the primary driver. That's what I trade. Okay, so we have PCE numbers this morning. Let's just take a look at how that fell and see if it moved anything. Dollar index, a little bit of a downside here move. PCE came in slightly higher than expected. Month over month was 0.2% compared to the forecasted 0.1%. Gold moving a little bit lower on that number. Silver, not a big move in response to it. Bitcoin's moving a little bit. Stocks, here's your 1-hour chart. Yeah, nothing major, at least in response initially here. Did you go long gold, Nick? No, I didn't. Did not take a gold long. I'm feeling glad that I didn't. Look at gold's been dropping here this morning. Let's take a look at gold. I'm sure a lot of people are wondering about what's happening here. So if I do take a trade on gold, I'll share this inside of the Discord. I'm watching it myself. It's possible gold could reach 3250 today. 3250 is right around here. That low of this candle, I'm imagining, is what you're seeing. Yeah, we very well could. Yeah, I'm gonna watch it. If I take a trade, I'll notify you guys. But I do like gold from a possible kind of like adding it as a hedge in my portfolio sort of thing, because I'm really long stocks and indices right now. So, you know, stocks and indices are doing great, but I don't mind the idea if I can find a good sort of hedge to the portfolio, if you will, which gold could act that way. I thought, you know, to be fair, I tried that with oil, did not work out well, stopped out on that one, but and silver, I also stopped out on silver. But gold may be another attempt for me, so we'll see. A little bit of resistance here overhead that has really held nicely, but to be fair to the bulls have also been able to hold, you know, this general area very, very well. So if we do see kind of another flush lower, here's the thing: gold is sitting right on the cusp of this upward trend line here. Level of resistance, I'm sorry, level of support, that 3,300 level. I do think it has upside, but I've been really not in a rush to take this trade. I have a really full set of positions in my portfolio right now. I have very little margin available in my account, or cash. I predominantly trade my portfolio with minimal margin used, but I do have very little available. So I would look at a gold position today. If I take that trade, like I said, I'll notify it in the group. Nice overall upward trend. I am bearish on the dollar, so it does fit my criteria for a possible trade. Dollar's also breaking support here. Check this out. Dollar index underneath the 98 level of support that had held so strong. Really impressive move lower here. The bears are just not getting tired on dollar. It's pretty impressive. Look at how consistent this year you've just had lower highs on this chart. Really, really impressive. Let's also take a look really quick at yields this morning. Yields have been trending lower. Probabilities for rate cuts have been increasing. While you have Powell being a bit hawkish, seems to be proving him right for the wait and see. We'll see. I mean, the thing is, while Powell is, the chairman and he's a little bit more on the wait and see side, we've seen like a huge rise in the rest of his, the committee, right? And it's definitely not the majority, but a lot more Fed members are like, hey, actually July is potentially live, meaning we could cut in July. And I've been pretty vocal on the channel here recently that I do think rate cuts are appropriate. Did you guys see the GDP number, right? The Fed themselves actually lowered their guidance or expectation, right? Their forecast for GDP. If we take a look at the U.S. economic heat map, this was a big miss yesterday in GDP stats. We missed by 0.3% on the GDP number. We also have PMIs that have been really poor compared to expectations. Both PMIs for manufacturing and services are in contraction. ADP was pretty rough this month. NFP kind of just barely met expectations. So to me, it's like, okay, you look at this and you say, yeah, the U.S. economic data is materially weakening. So if I look at this and I say, okay, is it appropriate to cut rates? Well, then the pushback would be, well, what about inflation? But look at inflation. We've had 1, 2, 3, 4 in a row, 4 CPI reports that came in softer than expected, right? Is there a soundtrack playing, guys? If there is, I am so sorry. There should not be. There is. Okay, I just turned it off. Sorry about that. I had no idea that was playing. So anyways, when it comes to the CPI report coming in soft 4 times in a row compared to expectations, U.S. economy showing some evidence of it's not, you have to understand the U.S. economy is not like showing signs of dying, right? It's just showing signs of slowing down. And so if it's kind of like going from a sprint to a jog, right? Or even a walk, right? So we don't want to, the thing is, if you risk not cutting rates for too long, you could go from a jog to a straight up kind of like falling over, right? And you don't want that. So the idea, the prospect of lowering interest rates doesn't necessarily mean you have to cut by, you don't have to cut interest rates to zero. But I think a lot of Fed members are suggesting, okay, we could probably cut rates by a little bit here because a lot of people are still feeling those huge impacts of inflation that we saw in the 2021, post-pandemic, all the pandemic stuff. We saw a global surge in inflation. People are still feeling that. And so, there is this idea that the housing world could use some help. The consumer has held up pretty well, but we're going on multiple years of higher than usual interest rates, at least in the last decade or so, and we have high interest rates relative to inflation. Inflation's come down a lot, so to me, and I think that a rate cut is, getting rate cuts started again is a process I think is likely to become more and more common in terms of the eyes of the Fed. That's why I'm long, the Russell specifically, is I think that the Russell disproportionately loves rate cuts to the other ones. And so if there is like, okay, rate cuts are coming in maybe not in July, but if we get 3 cuts this year or something, I think that the Russell will do really well. Dollar index, like I said, back down almost to yesterday's lows. Gold is threatening this level of support right now. Down 1.6% today. Gold is making a move. Silver as well, down 1.87% here today. Bitcoin's flat on the day. What are oil prices doing? Oil prices have really calmed down. We went from moving like 5+% per day to we've been in a range the last few days. Here's a look at the euro. The euro is just on fire here, guys. I don't know if you've been watching the euro, but my goodness, this thing is ripping higher. Pound dollar, same thing. Really, really strong right now. Dollar yen looks choppy here. Dollar Swiss franc, look at that, trending through those lows. The Swiss franc has been such a beast in the last few years. Swiss franc against most currency pairs is like the strongest. Dollar CAD here, still trending lower. The Australian dollar here, back towards those highs. The Kiwi dollar here, back towards its highs as well. Euro yen is just a monster. I was talking with Miko yesterday about, he was on the show, about euro yen. Look how strong this thing is. If this were to give a pullback, that would look really interesting to me. Euro yen at support here, but that's a ways away. So that's kind of a bigger, longer term idea, but we'll see if that comes back in. Pound yen, big breakout here on the daily chart. Now testing up against this 199 level of resistance. CAD yen broke this resistance point. Now just sitting at support. We'll see how it behaves here. Aussie yen, downtrend, but then kind of has been in the process of potentially reversing. If you take a look at like the Australian dollar against the Japanese yen, supply level 95, that could be a pretty key breakout point if it were to break higher from here. Kiwi yen, I took profits on this one earlier this week. I had a long trade that went pretty decently well. It wasn't a huge winner for me, and I sat on it for a while because it just chopped sideways, but I did end up taking like 106 pips on this pair. Can you talk more about the euro? Yeah, I mean, for me, if we take a look at the euro, for example, the EU economic heat map here has tilted more back into the negative side of things, specifically PMIs. PMIs this week, right? So manufacturing PMIs came in soft and as expected. Unemployment rate came in as expected at 6.2%. Producer price index was better than expected, came down. CPI came in as expected. Retail sales came in soft. Yeah, I'm kind of neutral on the euro right now. Closed my euro dollar trade. 10 minutes later, I saw on Discord that she closed it too. That's awesome. Nice, Bulent. Very nice. Yeah, I took profits on the euro move that I was in. In terms of setups now, I mentioned I would talk about the euro pound. So I do have a euro pound short trade. Actually, I have two trades open on euro pound. This trade's in drawdown. I went long. I went short here and I went short here. And I would be willing to add to the short position at around 86 or at around 87. So if we get a move higher from here, I will continue to hold this short and add to this short and potentially add to this short. Now, some people really don't like dollar cost averaging, and I understand why. A lot of people have like a really bad experience doing dollar cost averaging because they did it in the past and they approached it in a really there is a way to be methodical with it so that it's not just you're just blindly adding to losers and doubling and tripling with tears in your eyes until your account blows up. That's what people think dollar cost averaging is, when it not at all is that. Currencies, what I like about them is that they chop a lot. Like, as weird as that may sound, I actually like that currencies do this, because especially a currency pair like euro pound, which actually doesn't move a whole lot. Like this giant move on the daily chart, that was 400 pips, which is a lot of pips in terms of just like if you were day trading. But as a swing trader, to think like this giant move, from October of 2022 all the way to the lows of 2025, that move was 1,000 pips. Now, the reason I like a pair like Euro Pound is because it doesn't move all that much. And so that gives me plenty of wiggle room to take small size and to short this currency pair. Let's say I have this sort of campaign approach with a lot of what I do in my trading. So if I think that the Euro Pound is ultimately likely to move lower, right? If that's my thought, then I don't mind taking a little bit of a trade here, a little bit of a short here. And if it moves in my favor, then I'll look to close out and possibly start again. And if it moves higher against me, I'll trade it again. Now, the key in all of this is all that sounds good unless you're sizing inappropriately. If you take a huge short here and a huge short here, you can't stomach the idea of this thing moving higher. You think, wait, if it goes higher, I'm going to blow my account. If you're too far gone, if that's the way your sizing is, then the story has been lost, right? So the idea is if I'm thinking Euro Pound will move lower, I'm saying I'm not necessarily thinking it's moving lower in this next 30 seconds. I'm saying, okay, big picture, longer term, I think it'll move lower. So I'll take a little short position here, take a little short position here. And if the market rolls over, I'll take profits. And if the market moves higher, I'll build that trade into the size that I want it to be. It's a different style and it's not for everybody, but it's something that's worked really well for me. And I've done it for many years and it fits my style very well. So Euro Pound, I have two short positions open. Here's another one that I'm sitting in some drawdown in. CAD Swiss, back down to the lows here. I have two trades open on CAD Swiss. And I'm thinking about adding another one, but I don't know if I want to trade CAD Swiss or if I want to build my CAD basket. So I'm bullish on the CAD, right? So if I'm taking a look at the Canadian dollar, right now I like the idea of building more long exposure. I have very little long exposure to the Canadian dollar. I have a couple small trades. I want to build my long exposure to the Canadian dollar. So how do I want to do that? Well, I have choices. And so what I want to do is I typically want to take the Canadian dollar, which I am pretty bullish on, and I want to buy it against something that I'm pretty bearish on. So I might actually look to trade Euro CAD, short Euro buy CAD. Or maybe I want to do dollar CAD, which I'm a little bit softer on the dollar and more bullish on the CAD. Or I could do Aussie CAD. I already have a trade on Aussie CAD, and I already have a trade on CAD Swiss. So what I can do here, and I love this about currencies, is I can build a basket. So what I can do is I can say, okay, if I'm bullish on the CAD, I can sell the Swiss franc by the CAD. I can sell the Aussie dollar by the CAD. I can sell the euro by the CAD, and I can sell the dollar by the CAD. Do you see what I just did there? Is this making sense? What I'm doing is I'm saying I'm bullish on the Canadian dollar. And some of these other currencies, I'm not as interested, or I even think that they could go lower. So I'm building what is called a basket, where I prefer the CAD and I sell things against it. Does this make sense? I want to make sure that this concept of a basket makes sense. I'm not saying I'm going all in Canadian dollars with, a 5.0 lot size. That's not what I'm saying at all. I'm taking really tiny positions and I'm building them across the currency market. It's a bit of it's almost like trading with a portfolio or it's position trading, right? So this is what position trading is. And it's my bread and butter when it comes to Forex. So I hope that makes sense, but that is how I'm approaching, or how I trade Forex in general, is more of a basket approach / a carry trade approach, a little bit more longer term in nature, but not always. I've been taking some really quick profits too. Like I traded the euro dollar, took profits on this move. I went long right here, closed it out here. Obviously, I shoulda, coulda, woulda held it longer, but a profit's a profit, and I move back in when I can get the right setup again. So that's the game plan with Euro Pound, CAD Swiss. I'm building out my baskets and willing to keep doing that. because again, I have very small size as it is. And we'll see what happens next. By the way, if you want to trade with me, if you're interested in trading with me, today is the last day of our VIP 45% off sale. If that's something that you're interested in, if you'd like to see all the trades that I'm taking when I take them, VIP is currently 45% off. If you'd like some information on how you can get that, send us a direct message right here. You can speak directly to our support team who can get you in some information about our Discord, about our VIP group. If you want to trade with me, if you want to take your things to the next level, come trade alongside myself and the rest of the gang here at the A1 Trading team. We'd love to have you in the group. So send us a direct message. Just let us know you're watching and we'll give you 45% off any membership. So let me see here. I think we were going to have Kenzo join the stream, but it looks like we might be missing Kenzo today. Unless I'm off on my timing, but I don't think I am. Stock market opens up in 40 minutes. I mentioned this earlier, but my game plan is to trail stops on my Russell trade here today below yesterday's low. Just going to lock in a little bit more on that trade. The DAX trade's also working okay too. I'm not going to move stops or anything on this one. I'm going to let this one run. And if it makes a move back up to these previous highs, like if we get this kind of move, then I would look to trail stops on it. So I have a stop loss on my DAX trade. If it breaks down, I'll stop out. If it trends higher from here, then I'll continue to look for an opportunity to trail stops. It's interesting. Dollar is lower alongside gold. That can sometimes be really confusing to people. That could be pretty confusing to people. It's like, why can the dollar be going down with gold? But remember, they're not the same asset, right? The dollar and gold can move independently at times. So for example, the dollar and gold can move up at the same time. One of the easiest examples to give of that timing is when there's like geopolitical uncertainty, people typically want to get out of risky assets and they want to move into safe stuff. What is quote unquote safe stuff? Nothing is actually safe in markets, but perceived security is in gold and in the US dollar. So there are times where they can both move up, or there are times like right now where the opposite is true, where people feel way more risk on and they say, sell the dollar, let's get into stocks, sell gold, let's get into stocks, let's get into crypto, let's get into, higher risk stuff. So I think a little bit of that is happening right now because you've got gold, breaking down below a support level. Gold's like, the reason I'm not rushing to buy gold, like crazy is because again, the technicals they're pretty choppy. We had this really clean move in the beginning of the year that has really turned into a chop fest. We've just had back and forth. And if you've struggled to trade gold in the last few weeks or months, I do not blame you. There's a lot of people who love trading gold and that's like their primary thing. If you enjoyed trading gold in the first half of the year, actually, we could do a couple things here. If you're a trend follower that trades gold, actually, can I ask the audience just to weigh in on this? If you're a gold trader, have you been doing good with gold recently? Has it been tough? Let me know in the chat. I'm just curious to the gold traders. Have things been difficult for you too? Or are things, good recently? I guess it also depends your timeline. If you're somebody who trades like the 4-hour chart, we've had a nice downtrend or an uptrend here. If you're like on the hourly chart, still pretty choppy over here. Yeah. Okay. So I'm not crazy. Only use gold as a hedge, about the same. Indices look better. It's going good for me. It's been like Texas Hold'em. Horrible. Yeah. I mean, so I'm going to tell you this because I've traded gold as one of the primary things that I've traded for like 6 years or 7 years. And In the time that I've traded gold, that is just how it goes. There are times, the last few years have been phenomenal for me in gold. Like gold has been a primary contributor to my personal P&L in 2023, 2024, 2025. However, you got to understand everything goes in and out of season, just like everything goes in and out of style in the markets. Stuff goes in and out of style too. Right now, the cool thing to do is buy gold. That's the cool thing. And it's worked really well. You're listening to somebody who's been very much on the bullish side, and I've done well doing gold, and I still am bullish on gold. However, there are also times where gold is just an absolute menace to trade, where it fakes you out and it just goes down and up and down and up and up and down and down and up. Everything kind of has its season. Sometimes it's good, sometimes it's bad. Gold may be entering into a period where, okay, the pre-Trump era was really good for gold, and even in the onset of Trump's era. And this is seasonally holding up really well to what expectations were. Let me explain. Uncertainty is really high. I know obviously Trump is a very polarizing figure, but in general, there's been all sorts of studies. I'd encourage you to go pull some of these up. They're very interesting. Typically, the way like the seasonality around a switch in administration works is there's a lot of, sort of optimism initially, or some excitement about like some good changes. The good kind of runs to the front. And that's what we saw in, the initial announcement. We saw a very strong push higher in risk on assets on the November 5th election day. We saw stocks run up initially. And then as sort of the dust settles on the hype, right? The hype runs ahead. And then what happens? We're looking at the election or the playbook, right? This is seasonally observable. So again, I'd encourage you to look this up. Excitement about the new administration in general, doesn't matter if it's red or blue. And then in the onset of an administration, in the first year, especially the first half of the first year of a new president, the new changes can scare the markets. And in fact, I think the seasonality chart, if you look at it like across all the different presidents over like the last, I don't know how many years, it looks something like this. Off the top of my head, it's like choppy at first, and then in the second half, it starts to smoothen out in terms of average performance. You get the midterms, which are sort of, choppy again. And then at the end of a series, like this is the 4-year cycle of a presidential administration, right? You get choppy, then you get excitement, then you get choppy, then you get excitement. That's the seasonality of the 4-year US presidential administration stuff. So where are we on this chart? Right here. Like we all think like, oh, this is new, we've never experienced something like this before. But it's amazing how repeatable like human psychology stuff is. And I do think that we are likely to enter into a period of a little bit more normalcy. You know who else thinks that? Do you know who else thinks what I think? The market itself. Look at the VIX. The VIX is down to 16. The market, which is wicked smart, as they say in New England, wicked smart. The market is expecting a period ahead of less volatility. So over here, the market was expecting a ton of volatility, and it got it, right? Tariff uncertainty. Oh my gosh. Now we're entering into a period where it's like, okay, markets calm down a lot. Now, this is not a guarantee, by the way, just a heads up. This is not a guarantee that we don't get a huge spike and something goes wrong and something, breaks down again, right? But this story is a repeatable one. In the first half of our first administration, again, doesn't matter if it's red or blue president, take your pick. There's typically this period of like uncertainty of like, this is scary. This is new. People don't like change, right? And so the markets kind of freak out initially, or not necessarily to freak out. But it's rare that it's just kind of like all good, seamless, just straight up move. So what we've seen here is we've seen the panic initially, and now things seem to be cooling off a little bit. There was the euphoria ahead, right? Oh, less taxes, he's going to make all the businesses of the world more rich, right? Which has its own set of controversial topics, but Wall Street loved it, right? So initially there's like, oh, less taxes for businesses. And then it was like, oh, these tariffs are going to destroy the economy. And then now it's like, okay, we're not going to have as bad tariffs as we thought. And, markets are cheering AI and they're back to kind of doing normal things. And I think, in my opinion, the path of least resistance from here is markets are going to calm down for a little while and stocks are going to rip. That's my opinion. And so that's why we go back to gold. That's why gold's not doing too hot. Gold loved the volatility. Gold loves the uncertainty. It loves, unfortunately, like war and countries at up in arms with each other. Gold thrives in that. As weird as it is, it's kind of like the jealous cousin or something. It's like it's a kind of a weird concept. But gold has calmed down because now, the market's volatility levels have dropped significantly. And I think that it's probably fair to say the reason that I'm not like jumping to jump into a whole bunch of gold longs is because I think gold might consolidate. We've had an amazing run in gold. Like if you've been riding the gold longs, I get people commenting that, told me that they like just been holding on to gold over the years and have done really well. And that's awesome. Like the gold market, let's acknowledge what happened. We had an incredible run in gold from 2023 to 2025. We had an incredible run. Doesn't mean it's over, by the way. It could keep going. But I'm saying I personally have been in the camp of in the first half of this year when we had all that uncertainty, I was very much long gold and trend following gold. But we've lost that momentum and we've entered into a range. And so I'm very much I would not be surprised if we go back to test 3150, 3100. If we go back and retest those areas, it's still just on a big picture. It's just gold relaxing, right? We've had an amazing push up. Gold probably has deserved the right to chill out for a little bit. But again, I think that right now, it doesn't mean it's all over and that the tariff stuff is all good and everything is perfect. It's not what I'm saying either. But I think that the market is like way less freaked out than it was. And now the environment is like, okay, maybe we can talk about some of the good things rather than all the negatives. I think the market is starting to move in that direction. So we'll see. But, ultimately, how am I handling this? Well, I don't know the future. So I'm just trailing stops on positions that I have. I've made the educated guess that I think stocks and indices will continue to move higher. So far, I've been right. That could change. And if it changes, my goal would be to minimize damage. So I'm going to trail my stop loss here today. And I do want to still add a long on gold at some point here. I do have a bullish bias on gold. If I pull up our top setups page, gold is still very heavily bought by institutions. Seasonally, it's still a decent time. Actually, let's look at seasonality for gold. I kind of forget how the summer months turn out typically. If I go to, we have so many things in the EdgeFinder now. I gotta find where I'm at. Okay. Monthly seasonality. If I look at gold, yeah, so July is a positive expectancy month, but it's practically flat. So expectations for gold performance in the month of July, which we're about to go into, the expectation for gold performance is pretty much flat. Things get stronger in August historically, and then we have a negative period in gold on September on average. June did not hold up to expectations, at least right now. June was expected to be a positive month for gold. We've seen a negative one. How much? Let's just see. So where's June? June is right here. I guess, yeah. So we're talking about pretty much a flat month for June. We had some gains in June. We tested all-time highs, but then we failed to make new ones. And now gold's down 1.9% today. My goodness. Ball out and Lee, you guys are bearish on the dollar. Yeah, it's I like that trade. I mean, I'm in there with you. When it comes to dollar downside, I think that that can continue personally. I think rate cuts are coming. That's my personal opinion, not financial advice ever. But I mean, you've had the U.S. economy is. I want to make sure that we express this, because sometimes people hear this and they get confused, and I understand why it's confusing. People hear the U.S. economy is slowing, and they hear, so we're going into a recession. The sign of a recession in the U.S. is very, very low at this time, but the sign of cooling in the economy is very, very obvious. So the best way I know how to explain that concept, which sounds very confusing, you're like, what are you talking about? It's slowing. So is that a recession? Well, think about it as, think about it as your net worth, right? Your net worth, if you're working a full-time income, let's say that you're doing really well for yourself. Actually, I'm going to enjoy doing this analogy. You guys know I love my analogies. So this is you, okay? I'm going to compare it to the economy. So if we have, this is you, and this is your net worth. If you're growing your net worth really well and you're doing really well for yourself, right? Let's say you got a new job, a promotion, and things are good, right? This is you. This is your amount of money. You're still gaining, right? But let's just say that you now pick up some unfortunate financial burden in your life. Take your pick, whether it's like you have a new child. That's not unfortunate, but let's just say your financial burden increases. You have people to take care of. Let's say you're taking care of your parents. I don't know. Something happens in your life where you have to spend more money, right? So yes, your income is still going up, but let's say that now, because you have more financial burdens, your net income looks like this, right? What we would say is the amount of money that you're taking, that you're gaining in your personal, net worth has slowed because of the expenses, but your net income is still rising, right? So does this mean you still have a good job, you have a good income, but now you have more financial burden. So your net income is growing at a slower rate, right? This is what I'm trying to express with the US economy. The US economy is, in my view, slowing. It's not, right? Here's the difference. People sometimes hear slowing and they think this. They think that the GDP of the US economy is, trending lower on the long term, and that we are from here going to have, massive contraction in terms of growth in the economy. Essentially saying this, going back to our analogy, this would be like saying you lost your job, right? If you lost your job and you had the financial burden of taking care of people, that's like a recession. A slowdown is where you take on more financial burden, but you're still making good money, and your income is diminished by your expenses, but you're still gaining overall net income, or net total value, right? So I know that was not the perfect analogy, but I hope that kind of explained. When you hear that the US economy is slowing, that is not the same as saying the US economy is in a recession. Recession is when GDP is actually negative for 2 consecutive quarters. So we don't have that right now. And people might say, but Nick, GDP is negative right now. Well, yes, but this gives me the perfect opportunity to show you guys a new feature that is in the EdgeFinder right now. You ready? Under economic growth, check this out. GDP growth forecast, baby. Yes, sir. Got some new features for you guys. If you're an EdgeFinder user, it's free to access. It should already be in your EdgeFinder. Check this out. You ready? So we have just added to the EdgeFinder forward projections on GDP growth. So you might say, well, Nick, the GDP growth in the US is negative right now. So doesn't that mean we're in a recession? No, because look at the growth projections. Growth projections in blue for the US are still strong, 3.5% in Q2 2025. So we're expecting Q2 GDP growth to come in around 3.5%. That is above trend. That's strong. What about Q3? Q3 1%. And by the way, look at our counterparts here. Look at the UK, Japan, and Europe. They're in the 0.3, 0.3, and 0.1 respectively for Q2 expectations. Cool new indicator. And here's the thing. I said this. I hope somebody in the audience will make me feel a little bit better about this. I said that what's kind of a Debbie Downer for me personally is that when it comes to the EdgeFinder, a lot of people are like really excited about like the top setups page and the COT data, but this is the stuff that I'm like really, really into is GDP growth projections getting imported into the EdgeFinder. To me is like, this is it. But most of our users don't care as much about these sorts of tools. If you do, it would make my day if you are the type of person to dig through data like this. If that's you. Let me know in the chat. I don't know. Tell me you're excited about it. It would genuinely make my day. We just finished this, and my concern is that like 3 people are going to look at it. But if you're one of the 3 people, it's you, me, and some other guy. Then I would really appreciate if you maybe comment on a video after checking this feature out. But we have growth projections. We also added something else. Ready? Balance of trade. All of the rave this year, right? Everybody wants to talk about, trade deficits between the US and China and Europe and all this sort of stuff. But check it out. We added some data. We've got some balance of trade stuff here in the EdgeFinder now. So if I select US, you can see we're running at a pretty big trade deficit, and it says minus 75. I added on the right-hand side, just for context, what these units are. So it's minus 75 US billion dollars. So if I go for the US right here, we're looking at a $75 billion deficit, right? That's huge. Take a look at like China. We've got Chinese data in here. You guys know I wouldn't leave you hanging on China. China's running at a surplus. And in China's case, it's US dollar billions as well. 107 billion, 115 billion dollars. Wasim, you genuinely might have just made my day. Thank you. I'm not gonna lie. Sometimes I am afraid to launch new features because I know that they might be kind of niche, like GDP growth forecasts and balance of trade. I know that those are kind of niche and not very many people are going to look at them. So when somebody does and they're like, hey, I love that you added that, I'm not even kidding. It's like, oh, thank you for the recognition, because we work hard on this stuff. But I thought these were valuable indicators to add, especially if you're somebody who is truly in the weeds with fundamental analysis and you want to understand, if you want to pull up stats on balance of trade. My favorite thing too, you guys ready for this? Oh, I left the best for last. This one might actually be more interesting. Now, to the fundamental, nerds like myself, GDP growth forecast is so cool. Balance of trade is so cool. But this one is pretty cool to the common, kind of even the sort of pseudo, I'll check out fundamentals every once in a while. Interest rate projections, baby. This is it. This is the indicator, okay? This is the newest one that I think the most people will be like, that's cool. So the interest rate projections tool shows you in the future, kind of like the FedWatch tool, but I think it's better. Well, I take that back. The FedWatch tool has way more like in-depth details, but the interest rate projections are like simplified and beginner friendly, and also like most of the data that I want to know. This shows us the consensus currently about what the market expects in terms of interest rates rolling forward for major economies. Now, by default, I have selected Europe, the UK, Japan, and the US. But you have more than that. If you want to add Canada, if you want to look at Australia, check it out. you can look at the forward projection. Look at what you're looking at. You're looking at Q2, Q3, Q4, 2025, all the way out to Q1 of 2026. We now have interest rate projections within the EdgeFinder. This would be about the best possible time that I could share the news that the EdgeFinder this week is free to use. If you do not have access to the EdgeFinder, this weekend, if you have a little bit of time to explore the EdgeFinder, here's your chance to do so completely for free. We'll drop the link here in the chat to where you can sign up for this 1 week free event. It's ending Monday. So if you have a free availability this weekend to try out the EdgeFinder for the next few days, there is your chance. Spelling mistake and consensus. Thank you. Here's the link. While you do that, while you guys do that, let me finish or fix this word. Consensus. Thank you for that. This is a bug in Data Studio. Okay, no, it's working. Perfect. So there you go. So if we take a look, let's do some examples really quick with this. Let's look at US versus Japan. Actually, let's look at, yeah, no, this is fine. So the blue is the, whoops, I meant to do US and Japan. Let's take out New Zealand. Okay, so look at this. This is an interesting dynamic in the currency market too right now, which is US is expecting to cut interest rates. That's consensus. Consensus is we're going to cut rates. Check this out. Japan is expected to raise interest rates. They're expected to keep them steady here in Q2 at 0.5%, but in up to 0.8% in Q3. These are huge forces in Forex land, right? So these are new tools. Feel free to play around with them. Let us know if you have feedback on what you think we should do next or change or improve. Just for context here, for example, Europe is expected to cut interest rates in Q3 down to 1.9%. The US is expected to go from 4.5%. And by the end of 2025, we're looking at like a 4% consensus. That's 2 rate cuts, right? 2 25 basis point cuts or 0.25% cuts twice. That's the idea. Love the interest rate projections. Thank you, Tony. Thank you. Rest looks good. Thanks. Yeah. EdgeFinder getting better all the time and all for free. Thank you so much, Nick and team. Thank you so much for the kind words. You guys, when we roll out new features, I'm telling you, it is a really cool experience just to get emails and messages. It's motivating because a lot of the people who use EdgeFinder will send in like really nice words when we add features, and that just inspires us to keep doing more. So we're going to continue to make this tool the best that we possibly can. The EdgeFinder is free to use this week. Just a reminder, we'll drop that one more time because this is kind of your last call. We have Friday, Saturday, Sunday, and Monday. The EdgeFinder will no longer be free access to everyone. But everybody who's watching right now, if you don't have a copy of the EdgeFinder, it's yours for the next few days completely for free. So take advantage. We'll drop that link. There it is. Boom. Try the EdgeFinder for free until Monday. And if you like it, you can consider purchasing it. And if you don't like it, then keep it to yourself. I'm just kidding. If there's something you think we can improve, we are open to constructive criticism. And I'll try not to cry too long. Stocks here opening up in 10 minutes. Who do we have? Do we have somebody else coming today? Sorry, went to the wrong place. Live stream. By the way, if you're a regular, you can always go to a1trading.com, click A1 live stream right here. James 915. Is James dipping? Okay, I got messages. James bailed. Okay, got it. All good. It's all good. Stream is taking an early in today as well. That's fine. I told you guys this yesterday. If you were here with me, we're moving offices this weekend. So we will be in a new place. There will be a new setup behind me starting. We won't stream Monday. Tuesday will be our return. Because on Monday we're going to be setting up internet and doing all sorts of new office stuff. But in the meantime, we will have videos and coverage on what's going on in markets. Until then, like I said, take the time away to explore the EdgeFinder for free using that link that we just dropped in the chat. Thank you guys for tuning in to today's show, and we will see you back on Tuesday.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.